The United States has imposed sanctions on a Chinese refinery and approximately 40 shipping firms tied to Iranian oil trade, and that decision is not an isolated enforcement action. It is a structural signal embedded in a much larger geopolitical pattern. Let me restate the core of the issue in precise terms. Washington has sanctioned a major Chinese oil refinery and around 40 shipping companies. The stated reason is that these entities are involved in facilitating Iranian oil transactions, and that these transactions are linked to financial flows supporting Iran's military during an ongoing conflict. Beijing has responded by criticizing the move, calling it a politicization of trade, and urging an end to such actions. Before I go further, I want to know where you are watching this from, and how this is being framed in your country's media. Put it in the comments, and stay until the end, because the final report will change how this entire story should be understood. Now, to understand what is actually happening here, we need to remove the headline framing and return to structure. This is not simply about oil, it is not simply about sanctions, and it is not even primarily about Iran. It is about the intersection of three systems: energy flows, financial control, and geopolitical signaling. And this is where the analysis has to be very careful, because the next part is where most people draw the wrong conclusion. The United States is not sanctioning China as a country. It is targeting specific entities within China that are linked through commercial activity to Iranian oil. The justification is that these transactions indirectly support Iran's military capabilities during a period of conflict. That is the official logic. Beijing's response is equally structured. Chinese officials are not defending Iran's military. They are not engaging the accusation at that level. Instead, they are reframing the issue as one of economic sovereignty and opposing what they describe as the politicization of trade mechanisms. Two statements, two logics, both internally consistent. Both sides are correct about what they see. Neither is correct about what the other sees. Now consider the scale. One refinery, around 40 shipping firms. At first glance, this may appear limited, but numbers in geopolitics are rarely about volume alone. They are about signaling scope. 40 firms is not incidental. It represents a network, a logistical chain, a system through which oil is transported, financed, and delivered. And when a system is targeted, the message extends beyond the entities themselves. A sanction is never just punishment, it is communication. Let me be precise about this. The United States is using sanctions as an instrument to enforce a broader policy objective tied to Iran. But in doing so, it is intersecting directly with Chinese commercial activity, not because China is the primary target, but because China is part of the system through which Iranian oil reaches the global market. And this is where the structural tension emerges. China is one of the largest importers of energy in the world. Its economic model requires stable and diversified energy inputs. Iran, as an oil producer under sanctions, offers supply channels that operate outside conventional Western-controlled systems. That creates a natural point of interaction, not ideological, not necessarily strategic in intent, but structural. Trade follows need before it follows alignment. Now, the United States sees this differently. From Washington's perspective, any economic activity that enables Iran to sustain military operations during conflict becomes a legitimate target for sanctions. The logic is enforcement through disruption. Cut the financial and logistical channels, and you constrain capability. That is the enforcement logic. But here is the complication, and this is the part of the story that almost no one in mainstream discourse explains accurately. When enforcement intersects with another major economy's supply chains, it ceases to be purely about the original target. It becomes relational. And this is where the system begins to strain. China is not engaging in this trade as an extension of Iran's military strategy. It is engaging as part of its energy acquisition strategy. The United States is not sanctioning China as a geopolitical adversary in this specific instance. It is sanctioning behaviors linked to a third-party conflict. But the outcome is the same: friction between two major powers. Miscalculation begins when actions are interpreted outside their original context. Let us anchor this historically. This is not the first time sanctions tied to one country have affected another. In fact, this pattern has been visible for decades. When sanctions regimes expand beyond bilateral enforcement, they begin to impact global networks. And global networks do not operate on political alignment alone. They operate on supply, demand, and logistical feasibility. So what we are seeing here is not a sudden escalation. It is a continuation of a long-standing structural pattern: enforcement mechanisms colliding with interconnected economies. And this is where the analytical question begins to form. Because if sanctions on Iranian oil trade repeatedly intersect with Chinese commercial actors, and if China continues to rely on diversified energy sources, including those under sanction, then this is not a one-time event. It is a recurring point of friction. Today's enforcement action is tomorrow's precedent. Now consider the language from Beijing. They describe the move as politicization of trade. This is not rhetorical excess. It is a deliberate framing. Beijing is signaling that it views economic activity, specifically energy trade, as something that should remain separate from geopolitical enforcement frameworks. Whether that position is accepted or not is secondary. What matters is that it reflects a consistent policy preference. Washington, by contrast, does not separate these domains. Economic instruments are integral to its strategic toolkit. And here is the structural divergence. One system treats trade as a neutral mechanism where possible. The other treats trade as an extension of policy when necessary. Systems do not clash because they disagree. They clash because they operate differently. Now step back and look at the broader environment. There is an ongoing conflict involving Iran. The United States has tied these sanctions directly to that context. The implication is clear. Financial flows linked to Iranian oil are not neutral in this moment. That is the enforcement rationale. China's position is equally clear. Commercial transactions should not be constrained by what it views as politically motivated sanctions. And this is where the story stops being about a refinery. It becomes about the boundaries of economic sovereignty in a system where enforcement is global. Because sanctions imposed by the United States do not remain within its borders. They extend through financial systems, shipping networks, and compliance mechanisms that have global reach. That reach is not accidental. It is structural. Power in the modern system is measured by reach, not just capacity. So the central question emerges naturally. If enforcement mechanisms continue to intersect with the commercial activities of other major economies, and if those economies reject the legitimacy of that enforcement, what happens to the system that connects them? That is the question we need to carry into the next report. Because to answer it, we have to move beyond what happened and examine why each side is acting the way it is, and more importantly, why neither side is likely to change course. Structural conflicts do not require intention, only persistence. To understand why this decision was made and why the response was predictable, we have to move away from headlines and into the internal logic of each actor. Let me be precise about this. Washington is not acting randomly. Beijing is not reacting emotionally. Both are operating within established strategic frameworks that have been consistent over time. Start with the United States. The use of sanctions as a policy instrument is not new. It is embedded in the architecture of American power. When Washington identifies a state actor, in this case Iran, as engaged in military activity it seeks to constrain, it does not rely solely on military options. It uses financial pressure, trade restrictions, and network disruption. This is a system built over decades, and this is where the historical anchor matters. This is not new. The United States has long used sanctions to influence behavior beyond its borders. The mechanism works by leveraging control over key nodes in the global system, particularly finance and shipping. So when U.S. authorities state that a Chinese refinery played a significant role in purchasing Iranian crude oil, the logic follows directly. That refinery becomes part of the enforcement landscape, not because it is Chinese, but because it is connected. Enforcement follows connection, not nationality. Now, consider the second layer of U.S. logic. The sanctions are tied explicitly to financial flows supporting Iran's military during an ongoing conflict. This is critical. The framing is not economic competition, it is security enforcement. From Washington's perspective, allowing these transactions to continue would undermine the effectiveness of its broader policy toward Iran. So the calculation becomes straightforward. Disrupt the network, increase the cost of participation, signal consequences. A system enforces itself by raising the cost of non-compliance. Now shift to Beijing. China's response is also consistent with its long-standing position. Chinese officials criticized the sanctions and called for an end to what they describe as the politicization of trade. This language is not incidental. It reflects a structural preference within Chinese policy thinking. China's economic model depends on stable access to resources. Energy in particular is not optional, it is foundational. And this is where the analysis has to be very careful, because the next part is where most people draw the wrong conclusion. China is not engaging in Iranian oil trade as a geopolitical statement against the United States. It is engaging because it requires energy inputs from multiple sources, including those that operate outside Western-aligned systems. That is a structural necessity. Supply chains are built on need, not alignment. So when sanctions are imposed on entities within that supply chain, Beijing does not interpret this as targeted enforcement against Iran alone. It interprets it as interference with its economic operations. That is the divergence. Washington sees enforcement, Beijing sees intrusion. Two systems, one action, completely different meanings. Now, let us bring these two logics together. The United States is attempting to constrain Iran by targeting the networks that sustain its economic activity. China is attempting to maintain energy flows by participating in those same networks. Neither side is acting irrationally. Neither side is misinformed. They are simply operating within different strategic frameworks. And this is where the structural tension becomes unavoidable. Let me introduce the critical data point in this story, the one that changes how the entire situation should be understood.
Around 40 shipping companies have been sanctioned.
Think carefully about what that means. This is not a single transaction. It is not a single shipment. It is a logistical ecosystem. Shipping companies represent movement, continuity, repetition. When 40 firms are involved, you are looking at a sustained pattern of activity, not an isolated event. And when that pattern is targeted, the signal is not limited to those firms. It extends to every actor participating in similar networks. A network targeted once will behave differently everywhere. This is the point at which enforcement becomes systemic, because other companies, not just in China but globally, now have to assess risk differently. Do they continue participating in these trade flows? Do they withdraw? Do they restructure? This is how sanctions reshape behavior beyond their immediate targets. Now we turn to Beijing's response. Calling this politicization of trade is not simply criticism, it is a warning. It signals that China views this type of enforcement as a precedent that could expand. Today it is Iranian oil. Tomorrow it could be something else. Precedent is the most powerful form of policy. And this is where the deeper strategic concern emerges. If economic activity can be constrained through external enforcement mechanisms, then the autonomy of that activity becomes conditional. That is not a position Beijing accepts easily. Now let us step back again. We have seen this exact dynamic before, in different forms, under different conditions. When enforcement mechanisms intersect with rising economic powers, friction follows. Not immediately as confrontation, but as gradual divergence. Washington continues to apply pressure through established tools. Beijing continues to resist constraints on its economic operations. And over time, the space where both systems operate comfortably begins to shrink. Shared systems become contested when rules are not shared. Now, there's a common analytical mistake here. Many assume that one side will eventually adjust to the other, that the United States will moderate its use of sanctions, or that China will reduce its engagement with sanctioned networks. The historical record does not support that assumption. Both systems are internally reinforced. The United States sees sanctions as effective and necessary. China sees resistance as essential to maintaining economic sovereignty. Neither has an incentive to fundamentally change course. And this is the part of the story that almost no one explains accurately. The issue is not disagreement over a single policy, it is incompatibility between two operational logics. One integrates economic activity into strategic enforcement, the other seeks to insulate economic activity from geopolitical constraint. These are not positions that easily reconcile. Conflicts persist when both sides are following their own logic correctly. Now consider the immediate outcome. A Chinese refinery is sanctioned. 40 shipping firms are sanctioned. China criticizes the move. The United States justifies it. The system absorbs the shock. But the underlying structure remains unchanged. And that is what matters. Because if the structure does not change, the pattern will repeat. Not identically, but predictably. Repetition is the signature of structural problems. So the question we carry into the final report is not whether this action was justified or not. That is not the level of analysis required. The real question is this: what does this pattern, repeated, reinforced, and unresolved, tell us about the trajectory of the system itself? Because once patterns become structural, outcomes are no longer determined by individual decisions. They are determined by the system those decisions operate within. And that is where we turn next. Miscalculation requires no malice, only two different definitions of acceptable risk. What we are observing is not an isolated sanctions episode. It is the visible surface of a system in which enforcement power and economic interdependence are no longer aligned. Let me state this plainly. The United States is applying sanctions as a tool of strategic enforcement tied to Iran. China is continuing participation in energy trade networks it considers necessary for its economic stability. These actions intersect not because either side is targeting the other directly in this instance, but because the global system connects them. And when connected systems operate under different rules, friction is not an exception. It is the outcome. Structural forces do not require bad intentions to produce bad outcomes. Now consider the trajectory. This was not inevitable. It became likely through a series of specific decisions over time. The United States built a sanctions architecture with global reach. China built an economic model dependent on diversified external inputs. Iran, under sanctions, became integrated into alternative trade networks. Each decision made sense within its own context. Together, they produce collision points. Independent decisions can produce shared consequences. And this is where the analysis must move beyond individual events. The sanctioning of one refinery and 40 firms is not the core issue. The core issue is that similar intersections will continue to occur as long as the underlying structure remains unchanged. Because nothing in the current system reduces the probability of repetition. In fact, the incentives point in the opposite direction. The United States has no structural reason to abandon sanctions as a tool. It views them as effective, scalable, and lower cost than direct confrontation. China has no structural reason to reduce engagement with necessary energy suppliers, even those under sanction. Its economic requirements do not adjust based on external enforcement preferences, and Iran, as a sanctioned actor, will continue to operate through alternative channels. 3 trajectories, 1 system. Persistence, not intention, drives structural outcomes. Now, step back and consider the broader implication. This is not only about the United States and China. Other countries are watching this closely, particularly those that rely on global trade but are not aligned fully with either system. They are observing how enforcement is applied. They are observing how economic activity can become constrained through external mechanisms, and they are drawing conclusions. Every action in a global system has more than 2 audiences. The conclusion many of these actors will reach is straightforward. If participation in certain trade networks carries the risk of external sanction, then diversification becomes not just an economic choice, but a strategic necessity. That does not mean immediate realignment. It means gradual adjustment, and gradual adjustments over time reshape systems. Now, this is where the structural picture becomes clearer. We are not looking at a system that is breaking. We are looking at a system that is fragmenting, not through sudden rupture, but through incremental divergence, different rules, different risk calculations, different interpretations of legitimacy. Fragmentation begins long before separation becomes visible. Let me be very precise about this. The United States is not attempting to dismantle global trade. China is not attempting to evade all constraints. But their approaches to how trade should function under geopolitical pressure are not compatible. And compatibility is what allows systems to remain stable. Without it, systems do not collapse immediately. They drift. Now, return to the original event. Sanctions on a refinery. Sanctions on 40 firms. A criticism from Beijing. A justification from Washington. If we analyze this at the surface level, it appears as a discrete policy action. If we analyze it structurally, it is something else entirely. It is a signal that the mechanisms governing global economic interaction are no longer universally accepted. And this is where the long-term implication resides, because systems rely on shared assumptions. What constitutes legitimate trade? What constitutes acceptable enforcement? What constitutes sovereignty in economic activity? When those assumptions diverge, coordination becomes more difficult. Not because actors refuse to cooperate, but because they are operating from different definitions of the same concepts. This agreement over definitions is more persistent than disagreement over actions. Now, let us anchor this in the present moment. There is an ongoing conflict involving Iran. The United States has tied these sanctions directly to that context. China has rejected the framing that justifies those sanctions. Neither side is likely to adjust its position in response to this specific event. And that is the key point. This event does not resolve anything. It reinforces the pattern. Reinforcement is how patterns become structure. And once a pattern becomes structural, the range of possible outcomes narrows. Not immediately, but progressively. Options that once existed become harder to pursue. Paths that once allowed flexibility become constrained. And this is how strategic environments evolve, not through singular turning points, but through accumulation. Now, there is one final layer to consider. Most analysis of this kind of situation focuses on intent. What does Washington want? What does Beijing want? But intent is only part of the equation. Structure determines what is possible. And in this case, the structure is producing repeated friction points with no built-in mechanism for resolution. That is the defining characteristic. Systems without resolution mechanisms produce recurring crises. So we return to the central question. What does this pattern tell us about the trajectory of the system? It tells us that enforcement and interdependence are moving in different directions. And when those two forces diverge, the system that contains them cannot remain unchanged. It will adapt. It will fragment. It will reorganize. But it will not return to a previous equilibrium. Equilibrium, once lost structurally, is rarely restored. That is the structural conclusion.